Mortgage rates are rising, so now what? Will that put a damper on one of the hottest purchase markets we have ever seen? And where are listings going to come from in 2021? And why is now the time to buy or sell? What's the cost of waiting for not doing so? That's what we are going to cover in this monthly market report. This is for you if you're a real estate agent or financial advisor interested in market data to help you advise a client, or perhaps you are that potential buyer or seller looking for some direction. I'm Paulo Rodriguez. I've been a mortgage professional since 2005, and here is the market data you need to make an informed buying or selling decision or help your client do the same. So let's start with where we sit right now coming out of last year. Here is a quote from the National Association of Realtors that really summarizes 2020 and its final numbers. Existing home sales were at 5.64 million in 2020, up 5.6% from 2019, and the most since before the Great Recession. So despite the pandemic-related shutdowns, we sold more homes last year than in the entire 2019. And the amazing thing is, experts project that we will see even more in 2021. Here are the transaction forecasts from Fannie Mae and the National Association of Realtors and from the Mortgage Bankers Association. Each one of them having more sales this year than we had last year. So the story here is that the 2020 market is really setting up the 2021 market. Last month, you may recall, I shared a slide related to 2021 appreciation being 4%. Well, you can scratch that, make it 5%. Here are some of the most respected experts in the industry and what their forecasts are, the average being about 5% appreciation. Interest rates are something certainly that all of us are wondering about and talking about. This is the latest look of projections from Freddie Mac on the 30-year fix. Now, the last time I shared a slide from them a couple of months ago, they were projecting that rates would stay flat throughout 2021. And what's different this time? Well, we're starting to see that being revised upward. And I would expect as we go through the year, more revisions are forthcoming as the economy starts to improve. But the reality is that we're going to be in a very good rate environment in 2021. If we're at 3.2 or 3.5%, we're going to be in great shape regardless. So realtors, if you have rising prices and you have rising interest rates, it's time to get those buyers off the fence and ask them what they're waiting for. No doubt, affordability will be eaten into as rates rise and home prices rise, and I'll come back to affordability. But first, I want to share a quote from the chief economist at First American, and he had to say this: rising interest rates reduce house buying power and affordability. Well, we know that, but here's the point that he's making. But are often a sign of a strong economy, which increases home buyer demand. By any historic standard, today's mortgage rates remain historically low and will continue to boost house buying power and keep purchase demand robust. It's natural to think that a rise in interest rates may lead to fewer home sales, but historically speaking, a rising rate environment is signaling a better and improving economy. The gift of a recession, or the gift of an economic slowdown, is that we see the Federal Reserve and the federal government working to help lower mortgage rates by using the tools at their disposal. They know the economy will not recover until housing recovers, and we are the beneficiaries of that. So, if we look at what experts are saying, this is the latest rate projections going all the way through the first quarter of 2022. And as you can see, there's a range there. There's 3.1 on the low side and 3.5% on the high side, but all together showing this environment that I believe is going to be a very, very good rate environment. The one thing that I think we want to be talking about with clients, any client that we're working with, is that the reality of this year as it progresses is that there is going to be a cost for waiting. So if they're thinking about doing something, now is the time. Now is the time to go ahead and transact. Whether you're a buyer or a seller that needs to sell in order to trade up, now is the time, because the environment is going to be much more favorable at this point in the year as opposed to the latter stages of the year. There's no doubt people are saying, well, I would put my home on the market for sale, but I don't know where we're going to go. So if that's the case, then the question becomes, where will all the listings come from in 2021? This could be the one thing that certainly holds back the market and probably has held back the market relative to the number of people that want to purchase a home who just simply can't because they can't find one. Or somebody doesn't put their home on the market because they don't know where they're going to go. So let's talk about this for a moment, and here are some good visuals to help articulate where experts see listings coming from in 2021. First of all, the chief economist at Zonda said this: some people will feel comfortable listing their home in the first half of 2021. Others will want to wait until vaccines are widely distributed, and this suggests more inventory will be for sale in late 2021 and into the spring selling season of 2022. But let's look real quick at where we sit right now. This is a look at months supply of inventory going all the way back to September 19. And as at December 2020, there was only 1.9 months of active inventory across the country. Now, to put this into perspective, in December 19, we had 3.6 months across the country. Even then, one could have said that we were in a market that was deprived of inventory. And that is the case even more so today, due to all of the things that we know happened in 2020. The National Association of Realtors said this: total housing inventory at the end of December totaled 1.07 million units, down 16.4% from November and down 23% from a year ago. Unsold inventory sits at an all-time low of 1.9 months supply at the current sales pace, down from 2.3 months in November and down from the 3-month figure recorded in December 2019. The National Association of Realtors first began tracking this in 1982. So going all the way back to 1982, we're at the lowest point we've tracked active inventory. To put real numbers to this, there are about 320,000 fewer homes on the market today than there were at this time a year ago. So what are the things that are going to influence people to put their homes on the market and make up the shortfall? Well, we already talked about people are going to feel more comfortable in the second half of the year to list their homes, and the next piece is working from home. Here is an interesting study that came out from the National Association of Realtors Real Estate Forecast Summit. In 2019, about 6% of the population was working from home. In 2020, that shot up to 21%. 2021, we're estimating about 18%. And 2022, settling in to about 12%. So what do you take away from that? Well, the difference between 2019 and 2022 is that double number of people are working from home. And personally, I think 12% is too conservative. I speak with clients and prospects all day, every day, and way more than 12% are making life-changing decisions that involve working from home full-time or at least several days per week. This alone will certainly bring us more inventory later this year as people get clarity with respect to their employment situations and clarity around whether or not there is a need to live close by an office or a place of work. The other area that's going to bring more inventory into the market is builders. The Mortgage Bankers Association said this: new home sales activity, both mortgage applications and home sales, ran at a pace considerably ahead of 2019, showing the ongoing strong growth in housing demand and new residential construction. So we ended the year at builder optimism or builder confidence at a high. We ended the year with housing starts at a high and permits at a high. That means inventory is certainly coming to the rescue. So let's do a quick update to the mortgage forbearance question and what's happening to people as they come out of forbearance. This is the latest data coming from the Mortgage Bankers Association. There's about 2.7 million households in active forbearance right now, but for those that have come off of forbearance, this is what's happened. 51.7% are in that green portion of the pie. That means they've made their monthly payments, they either paid off their loan through a refinance or sold the home or paid it off with cash, and also the green includes those that still have the loan but are caught up on their payments. So much for the housing doomsday people that said everybody going into forbearance is also going to go into foreclosure. It's just not simply playing out that way. So moving on to the blue, that's 33% are in some form of workout or repayment plan, and the 15.3% in red still in trouble. These are the people that don't have a loss mitigation plan and now are delinquent. These are the ones that have already started a short sale, some sort of distress sale or deed in lieu of foreclosure, and those are the ones that could turn into a foreclosure at some point. I don't think they're all going to turn into that, but they could. Certainly not at the same time, thus nothing to worry about. Now, will forbearance bring a rise in foreclosures? Sure, it will. I don't see a crisis though. I've been very vocal about that from a data perspective, and I still don't see a crisis. But will we see a rise in foreclosures? Yes, we will. As a matter of fact, you can expect to see headlines that say foreclosures doubled or even foreclosures tripled. Of course, when you take a small number and double it, you've got twice as much, but it's still a small number. So my point is, don't let headlines mislead you. So let's talk about affordability. Realtors, by now you should be encountering objections from buyers saying that home prices are too high and sellers not wanting to list because they want to hold off for a higher price. In addressing this objection, to help educate your prospects, you want to be talking about affordability. Right now, the percentage of income needed for a mortgage payment is at a historical low. That historic number is 21.2%, and today we sit at 14.9%. That's the percentage of income on average people have dedicated to their mortgage payment. That's extremely low. Keep in mind also that people mistakenly assume that high prices imply low affordability, but that assumption does not take low mortgage interest rates into account, which allow buyers to finance more home. Here is the Housing Affordability Index from the National Association of Realtors. And where we sit today is at the highest affordability since the years affected by the housing crash. And just look at how much more affordable things are today than they were prior to the years of the housing crash. It's like night and day, but this affordability won't last. And the reason being that it's a certainty that home prices will continue to rise, and if interest rates also rise, the buyer that doesn't take action will lose out, and the seller that doesn't take action, despite getting a higher price over time, will pay the price of lower affordability over the next purchase, thereby negating the gains from holding out for a higher price. There is a cost for waiting for both buyers and sellers. The next piece related to affordability that we just cannot leave out is this quote from First American. Once you include the equity benefit of price appreciation, owning a home made more financial sense than renting in 48 of the top 50 markets, with the only exceptions being San Francisco and San Jose, California. So if you do the math on a $500,000 house, which increases by 5% this year, that's $25,000 in wealth for that individual or for that family. We just can't overlook that. People, now is the time to act. Now is the time to buy. Now is the time to sell. Go get it. So that's a wrap for the February monthly market report. I appreciate you listening in. Forward, subscribe, share. I'll be back next month. But before you go, if you're looking to purchase or refinance or know someone that is and would like a no-cost consultation with me personally, feel free to reach out and I'll be happy to analyze if your debt is structured in the most optimal way or if there's room for improvement. Thanks for tuning in. Bye for now.